All right, we're gonna go ahead and get started, man. We're gonna get started. Welcome everybody to Tim T's Bit. Y'all know what it is. Every Sunday at 3 p.m. Eastern Standard Time, we link up via the magic of Zoom and talk about our investing journey. I just share my investing journey with everybody in the hopes that you will put it into practice for yourselves and try to get to this financial freedom. This week, what we're going to do, we're going to tie together everything we've been talking about over the last 3 weeks. Over the last 3 weeks, we're going to tie everything together and start to move forward, start to get down to the meat and the potatoes. So the first week, second week, let me go ahead and share my screen and we're going to get right into it, man. I be getting ahead of myself sometimes. Y'all know how I do. Share screen. I want to go to the slides. I want to go to the slides. Let me get this in slide presentation mode over here. There you go. That's what I want. That's what I want. I wanted to look. Oh, man, I'm right over the dude head. I'm sorry, brother. I should have put your head in a different spot. But anyway, welcome. Like I said, this is Tim Tidbits. For everybody who has not, anybody who has not tuned in over the last 3 weeks, we've been doing this. When we get started, you already know what I want to do. I want to put out my disclaimer. There it is. I am not a financial advisor. I am not a fiduciary. I got to read it this time. I done forgot. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should consult a financial advisor before making any investment decisions. Now, with that being said, like I always say, with that being said, let me put it back full screen so I can, I like to say this full screen. With that being said, putting that out there, not to say that what I'm saying will not be beneficial, because it's changing me and my family lives, and it's changing other people's lives that I follow and are aware of, and I'm hoping it'll change your life too if you put it into effect, if you execute. So back to sharing the screen. Share. Got too many windows open over here, man. This Zoom be testing your knowledge of how to do stuff. Zoom be hitting you with too many windows. Yeah. So with that, the road here, how do we get here so far? The first week we started with how do I start? My wife told me, Tim, people hear you talking, but they don't know how to start. How do I start? We started out with finding out what's your why. What's your reason for investing? Do you want financial freedom? Do you want to leave your job? Do you just want to make some money? Just be honest with yourself. What's your why? What type of investor are you? Like, are you a long-term investor? Are you a short-term investor? Swing trader? Do you like to put it on for a couple days, take it off for a couple days? Are you an options trader like myself? I trade options, trade long-term options. You can trade short-term. Do you like futures? Do you like, forex? What kind of investor are you? And then we went a deep dive into how to open a brokerage account. And I used the example of Ally Invest, my personal favorite. I ain't gonna say my favorite, but the one I personally use. So I went through step by step, every button to click on how to open a brokerage account. Because people don't know, you need a brokerage account to buy and sell shares of stocks, to buy and sell options. You need a brokerage account to do that. Then the next week, we went into fundamental analysis. And what's fundamental analysis? Easy way to think about it is seeing how healthy that asset is, how healthy that company is, how healthy that ETF is. I like to trade ETFs. ETFs are exchange traded funds. And all that is imagine having a big bucket with a whole bunch of companies inside it. And when you buy that bucket, you get an exposure to all of those companies. That's what an ETF is. Got a whole bunch of companies inside one big bucket. And when you invest in that, you're investing in all them companies that's in that ETF. And you look at how healthy it is by looking at the macroeconomics is like the bigger picture. I explained it. It's like this, the big picture. The macroeconomics, it's like the state of the economy, the industry, conditions, how everything going. And then you narrow it down to the microeconomics. That's when you're looking at the company itself. You're looking at how much money they got. What's they moat? Like what separate them from other people? People call that a moat. Like you be doing the same thing I am, but my moat a moat, if you're anybody don't know, it's like a trench with some water in it around a castle. That's what's keeping you from getting in my lane. I got to let down my drawbridge for you to get over here in my lane because I got a moat around me. What's the moat? A lot of people call it the moat. What's protecting them? What's separating them from the pack? You're looking at stuff like that. How effective is their leadership? That's all the fundamental analysis is. You're just looking at how healthy that company or that asset is. And then the week after the third week, we went into technical analysis. And technical analysis, I like to keep stuff simple. I look at it as it's just looking at past price performance. What did the price do in the past? And because the way the stock market is, it tends to repeat itself with like price performance. It go up, it come down, it go up, it come down. When it get to a certain level of support, it'll bounce off it. When it get to a certain level of resistance, it go up, boop, come back down. It go up, go down. It moves in, patterns, trends, right? Patterns. That's the word I'm looking for. Now, I got an idea. Let's put it all together. Hey, look at my little emoji man. Y'all notice I've been using different emoji faces every week. You see him now, like he start out, they all got questions. He looking confused and lost. He kind of curious right there. And then this one here, he looking confused and lost. He kind of curious over there. Then down there, he kind of getting a little bit. And then here, boom, he got a good idea because y'all starting to get the feeling. Y'all starting to get into the swing of things now. It's starting to make a little sense if you've been going out and, doing a little research on your own and not just listening on Sunday. Even if you're just listening on Sunday, that's fine. At least you're getting something. Now let's put it together. How we gonna put it together, Tim? With these old free tools. Y'all know I like to use free tools. It's out there on the internet. 80% of stuff that probably 100%, but at least 80% of the stuff you need to know how to be a successful investor or trader can be found for free on the internet. And once you go out there and find it on the internet, that other 10 to 20 to 30% or whatever you need to be a good investor, that's in you. I can't nobody teach you how to be a good investor. They can just teach you what you need to do to invest. But the good part just come with practice. Now I'm gonna move over. You can see the list of things over here. I keep pointing like y'all can see with my mouse. Check my mouse out there. You can see the list of things over there. We got finviz.com. We talked about that in the past. Investor relations page. That's the different investor relations page for all the companies and stuff. ETF.com. I go to that because I like to trade ETF, exchange traded funds. Barchart.com, stockcharts.com, and CNBC.com. And as always, I'm gonna have the slides available. It ain't no lot of slides this week, but I'm gonna have the slides available. Anybody that's on here today, if I got your number, I'll text it to you. And if not, you can just go to, if I ain't got your number, just go to the YouTube link and it'll be a link in there to download the slides. But I'm gonna switch over to my Google web browser and we're gonna put it together. We're gonna put everything together today. Change my screen. Go to, where's Google? There it is. All right. Google. Now, when you starting out, I want to invest in something, but I ain't got no idea what company I want to invest in, what I ain't got no idea what. I hear you talk about these ETFs, Tim. I don't know nothing about no ETFs. I just know I like technology. Okay, it's something out there called finviz.com that can help you right on out. And this is how it do a lot of stuff. It's like you look at it, there's a whole lot going on this page. But what I typically use finviz for is to find like the stock tickers or what sector or what industry something that I'm interested in is a part of. Meaning, if you come to finviz.com, if you look over here on right over here up under my picture, get out of here ad. They got a lot of ads, so be used to that. Up under my little screen there where I am, this little map where I'm moving my mouse, that's called the map. If you come up here to the top left, the 1, 2, 3, 4th menu item in, it says maps. If you click on maps, it take you to a full screen of that little thing that was in the corner over there. And if you want to look at ETFs like I do, if you look at the map filter over here, you got S&P World Full Exchange Traded Funds. If you click on Exchange Traded Funds, it changes the whole thing to all the different exchange traded funds. right? And just like I said, I like technology. So if you come over here to the US sector over here and you see there where it says technology, these are all a bunch of technology ETFs that you can start to look into. Like I actually got money in XLK. So XLK, let's just say, okay, I come here, I'm interested in this XLK. How can I find out more information about that XLK? Then you can go to ETF.com, right? Go to ETF.com. You want to find out more information about XLK. ETF.com is like I look at it as the investor relations page for ETFs because it tell you all the information about ETFs. Like if you look, it say ETF screeners, ETF fund flows, all that. If you click on ETF screener database, it lets you put in like the ETF thing that you want to find right here. And then I'm just gonna put in XLK, right? And it pop up, boom, pull up XLK right there. Then you click on it, and when it open up, if it open up, what do you do? There you go. When it open up, there you go. It tell you all about XLK. Everything is like the breakdown you can read through about XLK, and you be like, man, I really like this. Yeah, I want to put some money into this. They got all kind of stuff you can look on there. They got like, you can see like the performance of it. Most of the sites have some kind of way you can see like the performance on there. You go 1 month, 3 month, year to date, 1 year. So a lot of stuff you can look at right here, like on this one site, and find out a bunch of information about this. And then I kind of jump around to other sites too, because I'm more familiar with that site for that reason. Like the only reason why I use ETF.com is just to read up on the ETF, see like what they about, what they earn is looking like, stuff like that, if they rated a buy or not. I use that for that to see what the analyst saying about the ETF I'm interested in. And then if you want to see what like the top 10 holdings are, I'm pretty sure you can find it on ETF.com, but the one I use for that most time is CNBC.com. Like I go to CNBC.com. I got it on my phone. I don't know what it looked like on the computer, but I go to CNBC.com, and it like on my phone, it showed me like the top 10 holdings. Let me see if I can find it on the phone. I mean, on the computer. On my phone is like, it look a little different, but it showed me like the top 10 holdings of what's the name? Hold on, I'm trying to see where it's set on the computer, because I'm looking over here on the right, because it's on my phone, it's over there on the right. And it show you like the top 10 holdings. And even if like I can't even find it on here right now, but even if you searched inside, like you did a Google search and say like top 10 holdings for, and put in the ETF, it'll show you. Let me see if it's on the profile. It'll show you, it'll say you can find it easy. Man, I need to look for it on my phone, because on my phone it's like easy, it's right there. Look at the top 10 holdings. So download the CBNC app and look at it on your phone, because it's easy to find on the app. You know, everything look different on the computer. But even if you just go to a Google page, and then if you just put in top 10 holdings for XLK, right? And it show you the top 10 holdings. You can find the top 10 holdings like this on Yahoo Finance. It show you the top 10 holdings right here. You know what I'm saying? Like if you just do a Google search, top 10 holdings of whatever, and it'll show you the top 10 companies in there. And then if you want to do a deeper dive into like what Apple is, you want to see more about Apple. Then if you want to know about the company itself, what I was saying, like the ETF.com was like the investor relations page. If you just go to just type in investor, if I spell it right, investor relations, they go Apple right there. Just investor relations Apple. It'll show you what their investor relations page. Everybody investor relations page is gonna look different, and then you can go through and it'll break down everything about Apple. We went through this, and one of the other things break down like they fundamentals as far as they pricing, they SEC filings, You can look at like they all the SEC filings. You can look at their stock price. You can look at their leadership. They got their leadership. If you want to know about their leadership, if you look at their 10K, their 10Q filings, their financial statements, the investor relations page for the companies themselves gonna tell you how healthy that company is, and ETF.com tell you about the ETF overall, kind of like the investor. That's how I look at it, investor relations page for the ETF. And then once you find all that out, what you want to look into, you say like, okay, when do I get in? You know, and when do you get in? You can either look at it from like a visual standpoint of seeing the let's go to barchart.com. I do a lot of stuff on barchart.com. I look at you can look at the charts. Get out of here, ad. Let me take all this other stuff off and just get like a regular chart so it don't look so confusing. The little weird thing around that's called the Bollinger Band, and then the line in the middle, that's called the moving average. But those are like indicators. Clear all. Yes, clear. Now I want to go to a regular candlestick chart. I like to look at candlesticks. I like to look at candlestick charts because it's easy for me to look at. And when you're looking at it, you know, you see it's going up, down, up, down, up, down. And then when it's coming down, that's called the pullback. And like right now, if you see XLK over the last, what's this here, from the mid of February up until now, it's been pulling back, right? And when I was saying before about support and resistance, can everybody see them crosshairs? Them crosshairs on there that's moving around? Yeah, yeah, you can see them. Yeah, so when it come up, it comes up to a point, and then it stops and it goes down. Then it comes back up and it tests that area, and then it go back down. That's called testing resistance, when it's keeping and it's bouncing back down. And then once it breaks through resistance, that resistance then becomes support. It comes down and test it, and if it's a good support, it'll bounce back off it and keep going up. You see them? You understand what I'm saying? Bounce and it keep going up. That's how you figure out when you think about when you want to get in. A lot of people, personally, I look at when it's coming back down to a point of support, which was previous resistance. Like right now, XLK is coming back down and it's right around the area of previous resistance and support. See, it was a resistance here, but it was support over here on this next row of candles. Like it was going up and stopped, went down, up, went back down, broke through, bounced off it. And now it's coming back down to test it. It came down, it tested it here, bounced back up. Tested it again, bounced. So it's right around here in this area, looking like it may stand up to be good support. So personally, right now, XLK looking good to me. And then how do you know if like I say, I traded options. Next week, we're going to get more into what options are and actually how to purchase an option in the option platform. But we're going to get into that next week. But I like to trade options. So once I visually look at it to see if I want to get into it, barchart.com has got a thing called performance report over here on the right on the computer at the top right, where it's a quote price overview performance report. If you click on performance report, it shows you what it been doing over the past 5 days, 1 month, 3 months, 6 months. So you're looking at this and you say, okay, over the last 6 months, since it's been pulling back for 5 days, been pulling. So over the last month, it's been pulling back because it's like down $3.33 from when it opened over the last month. So it's been pulling back, right? And then you look, say, okay, over the last 2 years, it's up $59.56 from the last time it pulled back, because I do long-term options. So then I'd be like, okay, once I come up with my strike price, we're going to talk about all of that next week, and I'm going to go over this again. And then I'll go over to option prices. And don't worry about it. I'm going through this fast because we're going to break this down into detail next week. Then you look at all the different strike prices over here. Once you pick out your strike price, and just say if I'm looking at the 133 strike, which, I'm just picking something. What's the one? Let me look at one with some good open interest. All right. let's get this one here with 102 open interest. That ain't, I like more open interest than that, but let's just pick that. And then when you go to price history, it show you, that's how I can tell if the option I'm buying is on sale or not. Where it's showing you where it's traded. The last price it traded at on this one here was 86 cents. But this is just, this just like a strike, a expiration that's like right now. So don't pay no attention to it. But this is how I go see if the option prices is on sale. And then once I do that, I go in and I purchase. But that's how I tie the fundamental and the technical together. The fundamental, I find what I want to invest in. I want to invest in XLK. Go to ETF.com and I read up on XLK, read up everything that it's about. Go to either Yahoo Finance or barchart.com on my phone and look at the top 10 companies that's in XLK. The top 10 companies are these companies here. I just know these good companies because I've been following XLK for a while. But if I didn't know that, then I'll go to the investor relations page for each of these top 10. You know what I'm saying? Each, because you can see how much they weigh on this thing, because Apple is 22%, Microsoft is 20%. That's almost half of the ETF right there between Applesoft and Apple and Microsoft. So with XLK, if Apple doing good and Microsoft doing good, XLK probably doing good, because it's like that they're a big portion of the holders. In the top 10 overall is 67% of the ETF. So if the top 10 doing good, and in all ETFs, in my opinion, if the top 10 doing good, the ETF doing good. So if they got good top 10 companies, you're going to be doing good. Then once you find out the companies, then you go to the investor relations page and find out, are these healthy companies? Does it make sense to invest in this ETF or even invest in these companies? Like if you don't want to deal with ETFs, if you want to just deal with good companies, a cheat code is to go to find an ETF in a sector you like, and then find the best performing ETFs in that sector, and then find the top 10 in that ETF and look at their top 10 holders. And then, okay, I may want to invest in Apple because it's in the best, that ETF doing better than the other ones in that sector or in that industry. I might want to invest in Microsoft. That's a cheat code to find good companies without doing a lot of research. And then once you find a good company, you can go do the deep dive by going to Google and typing in investor relations Apple, and it'll take you to the investor relations page. Then you can see how much money they got, how much money they made year over year, how much money they got on hand, how much debt they got. You know what I'm saying? What they plan on doing in the future. What innovations are they looking at? You look at all that. What's they moat to separate them? What they doing that other people ain't doing? Then once you figure out all of that fundamental information, then you go to either yahoo.com, barchart.com, or whatever that can give you like the charts, where you can look at the charts and you can visually see if it's at a high or a low point. Then once you figure out it's pulling back to a level of support, and we're gonna get deeper into that next week too, like when it's pulling back to that support, then you figure out, okay, this is when I want to get in, and then boom, that's when you go ahead and make your purchase. But that's how I tie together the fundamental with the technical to put on my positions. And then, like I say, next week we're gonna go. Oh, one more I forgot to tell you about. It's called stockcharts.com. Stockcharts.com. The only thing I use this for, if you look up here in the little search thing where it says sharp charts up here at the top in the center, where it say enter symbol name, if you click on that and come down to seasonal, change that to seasonal, and then you type in, I'm typing XLK since we've been talking about them. It gives you a breakdown, a historical breakdown from right now, it's from 2017 to 2021. That's 1, 2, 3, 4, 5. Over the past 5 years, it gives you a breakdown of the seasonality of it. So in January, 80% of the time, January, it closes, 80% of the time it closes higher than when it opened, meaning it goes up in January 80% of the time. 60% of the time it goes up. 50%, it's a flip, it's a coin toss in March if it's gonna go up or down. April, 100% of the time it's gonna go up. And this is just a visual way to see when it closes higher than when it opens. So these are the months. It's typically January, February, March, April, July. So January, April, and July, them the times it's going to be taken off. You probably don't want to be putting on positions during that time for XLK. The other months when they pulling back, them the times you might want to be looking into, okay, this one I want to put on. And that's what I use stockchart.com for. So I'm going to stop sharing my screen now. And then because next week we're going to get into like really deep diving into that stuff and actually putting the positions on. So I went real long today. So we had 26. We had 326. And before I opened up to see if anybody got any questions, I got to plug my folk. So do anybody got any questions? You go ahead and ask the question if you got a question. Somebody raise your hand. Oh, the chat. It's some stuff in the chat. I can't even see my chat. My chat ain't up right now. Let me go check the chat. My sweetie said check my chat. All right. Let me check my chat. I don't know what chat is. Where my chat? While I'm checking my chat, y'all know what it is. If y'all ain't up on the Come Up series, go check them out. Every Tuesday and Thursday, they go live talking about, investing, talking about the market. I don't know how to find my chat.
Hey, Tim.
Yes.
All right. So my question was based off the historical data from the XLK that you posted. Now's the time to buy because it is low and it typically trends up towards March, April timeframe. Is that correct?
Yeah. So for XLK, historically XLK opens up 50% of the time. It's a flip between if it's going to close high at the end of March than at the beginning. Right now we right at the beginning of March, and if you look at their chart for XLK, what I had a chart at, which one of them I had the chart up? That's Yahoo. I don't like Yahoo Finance. Y'all should be able to find it on there though. I don't be using Yahoo Finance for the charts. Chart, boom. Okay, let's just look at this chart right here. This line, sometimes the line chart. Oh. Let me get back to sharing. I'm on the slides. Let me put it on the right screen. Okay, so the line chart kind of easy to see the moves on the line chart, but it don't give me all the information. But if you look at this right here, this where I got my thing at moving right here, XLK about to come down. I wouldn't be like it came here and it moved back up a little bit, but I wouldn't be surprised if it came down just a little bit more and bounced off of that. That wouldn't surprise me. But since how much of a drop it has done from here all the way down to here, it may or may not come down that little bit. But in the long term, this little bit coming down right here won't affect you at all if you invested into long-term options. This just will be a blip on the screen. Even if this looks like a huge pullback right here from up here at the high of 138 all the way back down to where it's at now, 130.69, that looked like a huge pullback. But in the grand scheme of things, if you look at where it came from, like it was at 127 in September. Then it came all the way down here to 110 and by the middle of September, and then by the middle of February, it was all the way up to 138. So now it's just pulling back. I even wouldn't be surprised if it came all the way down to this peak right here, which is 127. I wouldn't be surprised if it came all the way to there, but it probably won't come all the way down that far, but anything can happen. But even if it did come all the way down to there, guess what? That would only be the second time that area was really tested, because it was only tested right here for that one time. That's the only time since September when this price came all the way down to this point. So to answer the question right now, is it a good time to buy for the long term? Yes, it's a good time to buy for the long term. For the short term, it may still pull back a little bit if you're doing it for the short term. So just be aware, it might pull back just a little bit. But for the long term, yeah, it's a good time to buy because it's on sale. That's a discount. I ain't got the math right now, but you went from 138 all the way down to 130. That's a good little discount. You can pull it back probably about good 9-10% maybe. Any other question? Did I answer the question?
Yes, thank you.
Any other question, anybody? No question, no question, no question. All right. Anybody want to say something?
I do want to say, Tim, I missed the beginning of it because I had work, but do you normally start out with going over the beginning phase, how you went over, I guess like the why, the how-to kind of thing? Do you normally do that at the very beginning of each class?
Oh no, that was just today. I went over that because that was just putting it together. But each one of those videos is on the YouTube page. The in-depth version of it is on the YouTube page. But today I just put it all together to it was like the road here and then put it all together.
Gotcha.
It was just like a refresher, like a recap real quick, and then put it all together. But like I say, each one of those videos is on the YouTube page, and this one gonna be on the YouTube page too. And they always gonna be up there until YouTube go away or until they close my account. They'll always be there. You can always go back and look at them. And then the link to download the slides is on each individual video. The slides for each week, the slides are there too.
Okay, thank you.
Anybody else want to say anything?
Yeah, I got something to say. Can you hear me?
Yeah, I hear you.
Okay. I missed the beginning too, but she already asked, so I heard the answers to that. As far as a financial advisor, I'm quite sure I ain't the only person out here that may feel like this. But as far as you keep saying you're not a financial advisor, what if people got a work schedule so busy, but they so interested in what you're doing, they may want to just give you a percentage or pay you to be their financial advisor and handle all of this stuff for them? You know, you call them and mention to them like, hey, I'm about to go into this stock. Do you want some of this too? You know what I mean?
Yeah, that like just telling somebody some stuff like that. Yeah, that would be a financial advisor. Actually doing it for them, that would be a fiduciary. And I ain't now one of them. You got to.
That's what I'm saying. They may want to hire you. That's what I'm saying.
Yeah, I ain't certified. You got to go to school. You got to go to school and take some real hard tests and get SEC certified to be a financial advisor and a fiduciary. This is gonna be on YouTube, so watch that right hand.
All right.
Do your disclaimer every time, son. Do your disclaimer. You're not a fiduciary. You're not a financial advisor. Do their own research.
Yeah, with that being said, even if like Dustin is my fiduciary, he's my financial advisor. Dustin Tidbits with jazzwealth.com. They're not taking new clients right now, but if y'all want to look into them, Rashad from EYL Earn Your Leisure, one of the people that was on the slide, he's a financial advisor. But do your own research. Even when Dustin tell me stuff, I go back and I research it. I already know it's gonna be facts because he, you know what I'm saying, he's a great financial advisor. He used to be a trader. He's a fiduciary. I already know it's gonna be facts, but I go do my own research. You know, I do your own research. Everything. That's why I try to share. I ain't gonna say give. I try to share the tools that I use so you will know where to start. Because it took me months to figure all this stuff out. I'm just trying to put it all in one little box for you to say, okay, he said he used this for this, this for this, this for that. You can do a lot of the stuff on all the pages. You might like Yahoo Finance just because I don't even know how to use CNBC on my computer, as you can see, but I know how to use it on my phone. You know what I'm saying? But use the tools that benefits you, because my investing style won't be like yours. You know what I'm saying? This person invest style won't be like his, but use the tools to, educate yourself on the platform, because even if you just copied what I did or just went off of what I said about buying it, you may have success. But can you repeat it in the future? It's all about educating yourself to be able to repeat it in the future, share it with your kids, share it with your family, share it with your friends to obtain true financial independence.
Well, as always, great job.
Thank you, Auntie.
Great job.
Thank you. I see you with your background every week. Got your backgrounds.
Okay, show my, gotta keep little things private.
Yeah.
Hey, honestly, I want to add to that too with the good job. You remind me of one of my favorite teachers. Only one of my teachers I learned something from.
Well, I appreciate that. I appreciate that. Oh, they go to chat. I see the chat. I just found it at the end. I found it at the end. Okay. But yeah, thanks everybody for tuning in. If nothing else, y'all know what it is, man. Till the next time, I'm gone.